Good morning, everybody, and thank you for joining us on our fourth and last day of the FDP meeting. So this morning, we're going to be having a session on promising practices. So to start off, we're going to first go over some Zoom reminders. So if you experience any Zoom issues, please call 1-888-799-9666 and choose option 2. Your audio will be streamed through your speakers. And you can submit questions anytime throughout the presentation in the Q&A box at the bottom of your screen. This session will be recorded, and that recording, the slides, and the summary will be posted on our website, theftp.org, after the meeting. So I'm going to pass it off to Cindy Hope to introduce the session and our speakers.
Thank you, Sarah. Good morning, everyone. Thank you for joining us. I am Cindy Hope. I'm with the Georgia Institute of Technology, and I'm very happy to be presenting our guest speakers today for this session. They're both with NSF's Office of Inspector General. We have Mark Bell, who is the Assistant Inspector General, and Ken Lish, the Director of Contract and Grant Audits. They're both with the Office of Audits, and we'll be learning in just a few minutes a little bit more about how that is different from some other parts of the Office of Inspector General. And I wanted to reiterate what Sarah said about posting your questions in the Q&A throughout. I will be monitoring that throughout, and when there's an opportunity to pose your questions, I will do so. Anything that we don't get to throughout, I'll try to get to at the end. I wanted to also remind you that there is a link to the report on which this presentation is based in our agenda. So for those of you who are interested in the full report, I highly recommend you seek that out. So with all of that said, I'm going to turn it over to Ken. Thank you.
Thanks, Cindy. Appreciate the introduction. Thank you, everyone, for having Ken and I here today. We really appreciate the opportunity to share the details of our work with you. About 5 years ago or so, we presented to this group. I had just joined this community, and I left that meeting knowing we had to do a better job, that we had to bring more value to the community. Audits are an inevitable part of doing business with the government, and we needed to improve the impact and give the community better tools to do your job, conduct science. So we modified our audit approach to focus on areas with the most risk at individual institutions. We worked with NSF to improve communications and apply more consistency to findings. And hopefully we lowered the burden of having an audit maybe a little bit. Today, Ken and I will talk about one of the outcomes of these efforts that hopefully will be a valuable tool in helping you more easily perform the business end of your work. Go to the first slide, Ken. I'm going to go over some basic things about the OIG for those who aren't familiar. Then we'll go into an in-depth discussion on the promising practices for award management report that we recently issued. We'll round out the presentation by going over whistleblower information. As Cindy said, please feel free to ask questions along the way in the Q&A. We're also planning to leave some time at the end of the presentation, about 15 minutes, for questions, and we're always willing to take questions that we can't get to in the chat and answer them offline in a written form through emails to FDP. So thanks, Ken. Each federal agency has an Office of Inspector General that provides independent oversight of the agency programs and operations. We're responsible for promoting efficiency, effectiveness in agency programs, and preventing and detecting fraud, waste, and abuse. By statute, the NSF OIG is independent from the agency, and RIG, Allison Lerner, reports directly to the National Science Board in Congress, not to the director of the NSF. We have two primary divisions in OIG. We have the Office of Audits and the Office of Investigations. In the Office of Audits, we're responsible for conducting audits of both the agency and NSF's award recipients. The Office of Investigations is responsible for conducting audits of both the agency and NSF award recipients. Excuse me. The Office of Investigation investigating allegations of wrongdoing as they relate to NSF and its recipients. Beyond that, we have a robust outreach program to help build relationships with the award recipient community. This helps disseminate information about what we do, highlight recent findings, and anything else that might be important to the community. In today's presentation, we'll be focusing on the audit side of the house. Next slide, Ken, thank you. Despite the explanation I provided with the last slide, we still get the question of what is the broader role in research enterprise and how do we add value? Every organization that receives federal funding plays an important and vital role in ensuring our proper stewardship of taxpayer dollars. Organizations that receive federal funding through grants, contracts, or cooperative agreements must ensure they're complying with all federal applicable federal regulations and are making responsible decisions with taxpayer funds. The public's confidence in federal funded scientific research and the research enterprise as a whole is undermined when funds made available for research are misused. By operating as an independent and objective organization focused on providing efficiency, effectiveness, and accountability of NSF and its recipients, our role in the research ecosystem provides Congress and taxpayer greater confidence that public funds are used efficiently and effectively. To state that differently, our role helps protect both the perceived and actual integrity of federally funded research environment, protects the scarce and limited resources from being spent unwisely so that those resources can go to the highest and best use, builds confidence in what I believe is one of the most important systems in the world, the system of funding the transformational and groundbreaking research that's going to give us solutions that will help us as a society and country continue to thrive well into the future. In January, we issued a report titled Promising Practices for Award Management. In this report, we've essentially taken all of our observations and lessons learned from 18 audits of NSF award recipients over the past 3 years and packaged them into this single document. And by the way, I'm the boss. Ken is responsible, is the actual architect of this work and his team. So credit for this really goes to them. What we're going to do today is introduce you to the report, and Ken's going to walk you through the contents. And hopefully by the end, we'll have convinced you to download the report and use it to help further evaluate your grant management environment. With that, I'm going to turn it back over to Ken so he can walk through the report and some of the things that are in there.
All right, thanks, Mark. So if you don't have the report pulled up already and you're interested in reviewing it while we talk, you can easily find the report simply by Googling NSF OIG Promising Practices, or you can use that link that was on the prior slide. So during the course of our audits, we do observe a lot of great practices, as well as dedicated research administrators and faculty who are working hard to ensure the proper stewardship of NSF funds. This report gave us that opportunity to actually highlight those observations and package our lessons learned into a single, easy-to-use product. I know with auditors, it's a lot of doom and gloom, but this was our opportunity to actually pull out some of the promising and better practices that we've seen and hold up the strong things that we're seeing from the community. So it's our belief that this report has the potential to be more impactful than any single report that we could write, mostly because while a typical report focuses on just a single institution, this report is written to be beneficial to the entire NSF recipient community. So it's our hope that you as members of the recipient community can use this report to gain insights from your peers and to better understand what we commonly find during our audits. One thing we do want to level set at the outset of this presentation is what this report isn't. So this report is not a policy document that institutions are expected to adhere to. We've done enough audits that we now know that every institution is different, and there's no such thing as a one-size-fits-all approach to award management. This report is instead intended to simply communicate what we've observed across our audits with the goal of using these observations to benefit the recipient community and broadly enhance the stewardship of NSF funds. Additionally, we also understand that it doesn't serve the recipient community or any of our other stakeholders to publish a report on promising practices if there is underlying disagreement between us and NSF on the practices that are identified in the report. So to help remove that risk of disagreement, we provided a draft of the report to NSF for its review, and NSF took the time to review the report, and they provided us with some really valuable and helpful feedback, which we ended up incorporating into the final report. I think it's also worth noting that over the past few years, we've continued our long-term trend of strengthening our relationship with NSF. And as a result, we are collaboratively working through policy questions and interpretations that crop up during audits in real time, rather than waiting for an audit to be issued and doing that during the resolution process. This reduces and eliminates the risk of findings where institutions get caught in the middle of policy disputes between us and NSF. I'm sure I don't need to remind many of you about our 2-month findings from several years ago. What I will say is that our strengthened relationship not only prevents those types of situations from occurring, but also eliminates the time, the energy, and the resources and the burden that you all as auditees would dedicate to responding to those types of findings. Another benefit of this strengthened relationship is that we've seen a significant increase in the level of agreement between us and NSF in terms of how NSF is resolving our audits. So even though we are independent of NSF and take steps to safeguard that independence, I think it's fair to say that both us and NSF see the value in increased stewardship in having a proactive and collaborative relationship. So seems appropriate that we extend our appreciation to the many NSF leaders that have played a role in nurturing and strengthening that relationship with the shared goal of maximizing stewardship over NSF funds. So how did we come to the conclusions that are outlined in this report? Starting in 2018, we had an independent public accounting firm, Cotton & Company, conduct 18 distinct audits of NSF award recipients on our behalf. In addition to evaluating costs and the auditee's ability to manage NSF funds, we also included a requirement within that contract to have Cotton observe, identify, and catalog both the strengths and opportunities for improvement for each auditee that they audited. This type of information wouldn't normally be included in a typical audit report, but we knew back in 2018 when we wrote that requirement that it could lead to the collection of valuable information and further insights that we could be able to share with NSF and the recipient community. So we fast forward to the end of 2021, and we felt like we finally had enough cataloged information to write a compelling report that could be useful to all of our stakeholders. So to help facilitate a more complete understanding of the promising practices we identified, we structured the report to communicate the most common audit findings and sub-findings that we identify. At the highest level, the most common findings can be broken down into the following 5 categories: unallowable expenses, inappropriately applied indirect costs, inadequately supported expenses, inappropriately allocated expenses, and non-compliance with policies and procedures. As you can see, we also provided high-level suggestions for improving controls in these areas. Now, with that said, in Appendix 2 of the report, if you have it open or if you're going to go to it later, we get much more granular with both the findings and the suggestions. So we organized the report with a body as our introduction, and the body of the report is really the high-level findings and suggestions. It's short, to the point, it's only 3 pages long, and it's meant to be easily digestible. After that, we have a series of appendices. Appendix 1 just describes our objectives and methodology. Appendix 2, as I just referred to, that provides the detailed explanations of our findings and 46 different distinct examples of the most common findings we observed during our audits, along with suggestions for improving controls and promising practices that we observed from award recipients. So Appendix 2, this is the real meat and potatoes of the report, that if you're going to look at it and spend some time going through this report, that's where you should really focus your time and attention. And then finally, we have Appendix 3, where we include a glossary of all the terms and citations that are found to the report. So I'm imagining an applicable question from this group that's probably going through some of your heads right now is, how can this report reduce the amount of time and effort and burden in administering federal awards? So I have 2 answers to that question. We'll start with the obvious one. Audits are a necessary, but for you all, an unwelcome and likely burdensome part of receiving federal funds. I'm sure that I ruin just about everyone's day when they receive an audit notification letter from me. With that said, my favorite type of audit is probably also your favorite type of audit. And that would be a clean audit with minimal findings, minimal recommendations, and minimal question costs. We want to see, just as you want to see, that people are being really good stewards and have really strong controls over the funds they receive from the federal government. At its core, this report highlights all of our common audit findings. If you have strong controls and processes in all of the areas that are listed in Appendix 2 of this report, you'll be pretty well prepared for an NSF OIG audit. The second way this report reduces burden is by directly linking to the strong policies and procedures we've observed throughout our audits, and that way you can learn from your peers. All of you have designed and developed controls to ensure compliance with both the Uniform Guidance and NSF policies, but we know that those controls can be designed in dozens of ways. So this report gives you that opportunity to see how your peers have designed parts of their control environment and could potentially help your institution make tweaks to its control environment to become more efficient and effective and less burdensome for your staff. One thing I do want to emphasize is that for all 46 finding examples that we describe in Appendix 2 of the report, we also provide high-level suggestions for addressing those findings. We know that every institution is different, and the suggestions that we're making might not be the right piece for your control puzzle. But we're hoping that the suggestions we're making can at least provide a starting point for your organization to consider and evaluate your own policies. So within each of the 5 high-level finding areas that I just discussed, we broke each finding area into the most common sub-findings that we identified. And that's what's illustrated on this side. So for example, in the first bubble in the upper left-hand corner, we identified 8 sub-findings within the broader category of unallowable expenses. So we touch on travel, participant support costs, salary and wages, materials and supplies, fringe benefits, publications, consultants, and sub-awards. We describe each and every one of these sub-findings in detail within Appendix 2 of the report, and then provide the examples of the 46 most common audit findings that I previously mentioned. So let's jump into some of the sub-findings that we describe in detail within the report. So the middle section right here of this slide is intended to communicate the high-level finding area, the sub-finding area, and the example of the sub-finding that we're going to discuss. So for instance, on this slide, we're focusing on an example within the unallowable expenses finding area, and more specifically within the travel sub-finding area. With this example, as you can see, we're going to discuss unjustified upgraded airfare. So what is our common finding in this area? Award recipients often charge NSF for costs associated with upgraded airfare tickets, for example, first class or business class, without either removing the difference between the cost of an equivalent economy class ticket and the costs associated with the upgrade, or providing justification to support that the upgraded airfare expense was allowable per the uniform guidance. What we're suggesting is that award recipients could require travelers with upgraded airfare tickets to provide documentation to support the cost of an equivalent economy class ticket, thereby enabling the award recipient to remove the unallowable portion of the upgraded airfare and or provide a justification to support that the upgraded airfare was allowable. We then, for each of these examples I'm going to go through, highlight promising practices that we observed during the course of our audit. So in this case, we identified a promising practice at Texas A&M. Per Texas A&M's travel guidelines for air transportation, when travelers book non-standard airfare using its travel system, which in their case is Concur, the system automatically creates an exception form that requires the traveler to justify that non-standard airfare. We just want to note that we have this promising practice in all of our promising practices throughout Appendix 2, called out in text boxes within the report. And within those text boxes, we include links directly to each of these promising practices. So our next example relates to participant support costs. We commonly find that recipients use participant support cost funding to support employee participation at sponsored project events, obtain conference speakers, or purchase goods or services that were not specifically outlined and justified in the participant support cost budget and or otherwise approved by NSF. As I'm sure all of you know, participant support costs cannot be rebudgeted to other budget categories without NSF's prior approval. What we are suggesting is that award recipients could provide additional training and update their internal participant support cost policies to identify allowable uses of participant support cost funding. And further, the updated policy could note that if an award recipient plans to use participant support cost funding to cover costs that fall outside of the uniform guidance definition, it should ensure those costs are either justified in the budget detail, so a pre-award step, or otherwise officially approved by the NSF grants officer, which would be a post-award step. During the course of our audits, we observed that the University of Connecticut's participant support procedure defines what participant support is. It references NSF policies, and it notes that separate accounts must be established to track and report participant support costs for each award. And it emphasizes that participant support funding may not be used for other expense categories without prior written approval of the sponsor.
Hey, Ken, could we stop here for a question?
Yes.
Okay, it actually relates to your previous slide. And the question is that your slide shows that 94% of the findings, are for unallowable expenses. And, what they're getting at is, could this report be taken by someone such as somebody in Congress as an indication that there are a lot of unallowable expenses? The person says, if our school has, 30 million in NSF expenditures, and you're showing only the percent of the institutions with findings, then that might be sending the wrong message. So what do you think about that?
No, that's a good question, and we absolutely don't want to send the wrong message or a misleading message to Congress or any of our other stakeholders. So one of the things that we do in the objective and methodology section of the report is that we try to clarify that, for instance, that 94% is only relating to the number of audits we conducted that had that type of finding. So while we do see that most of our audits do have unallowed expenses, that doesn't provide commentary on the volume of our audit population that we necessarily questioned. So we're not saying that 94% of the costs are unallowable or anything like that. And we have had substantial stakeholder communication regarding this report. And honestly, one of the things that we do try to highlight, and not that we do try to highlight, we do highlight, is that this is really a good news report, that this is, we see lots of research administrators and principal investigators and everyone else in the process working hard to do the right things. And we wanted to use this as a mechanism to kind of highlight that and hold up those right things. So I think if anybody were to pick up the report, there should be enough guidance in there to help them understand that this isn't one of those instances where 94% of things are bad. This is just saying that this is the most prevalent type of finding, and we included this. That way it helps the research community kind of hone in on this area, because this is where we see the most amount of our findings, and that's something that you can see. That way, if we were to come audit any of you all, you would know that this is probably an area we'll be looking at
Right.
in detail.
Thank you.
Yeah. All right, let's see. So our next slide, so our next example relates to purchases made after an award. We often find that award recipients used funds remaining on an NSF award that had expired to purchase supplies that they intended to use to support activities that would occur after the award's expiration. So what we're suggesting is that award recipients could strengthen procedures surrounding the approval of expenses charged to sponsored awards after the awards have expired. We observed that Florida International University's close out a sponsored projects procedures states that the principal investigators must ensure that all project expenditures post to the project during the project performance dates, and that the PI may not charge new expenses to the project after its end date. Our next example relates to indirect cost rate application. We observe on a fairly consistent basis that recipients apply the indirect cost rates that were in effect on the date they submitted the award proposal without determining whether they needed to make adjustments to reflect the indirect cost rates that were in effect when NSF issued the award. To address this issue, recipients could develop and implement a control to identify when indirect cost rates change between the proposal submission date and the award date, and take appropriate steps to avoid claiming unallowable indirect costs on an award. As a promising practice, University of Houston's sponsored projects negotiated indirect cost rates website provides relevant criteria, definitions, and examples to help their staff determine which indirect cost rates they should apply to expenditures that are recorded on sponsored programs. Now, as a side note, and as I'm sure some of you have previously heard me describe, so I apologize if you already heard this, but we really want to make sure the community gets this message. I want to highlight that this has been one of our more controversial findings as of late. Over the past several months, we have actually adjusted the way that we are presenting this finding in our reports, and we are acknowledging that recipients do have the authority to collect a lower indirect cost rate than they are authorized if they so choose. However, recipients must have controls in place to ensure that the rates applied to NSF awards do not exceed the rates in effect at the time of the award, which would result in overclaiming indirect costs on NSF awards. This type of scenario could occur in an environment where negotiated indirect cost rates move in a downward trend, resulting in a higher rate in a proposal than the rate that is in effect when an award is made. Our audit procedures going forward will seek to identify that a recipient has controls in place to preclude this from occurring. We have worked extensively with NSF's resolution group on this finding, and we are in alignment on this path going forward. So our next example also relates to indirect cost rate application. Throughout our audits, we've identified instances where award recipients applied indirect cost rates to costs incurred to individual components of equipment that cost less than $5,000 each. This includes the purchase or shipment of attachments or accessories or other auxiliary apparatus that the award recipient should have capitalized as part of the equipment's acquisition cost in compliance with the uniform guidance. What we're suggesting is that the recipient could develop a review process for material and supply purchases charged to federal awards to evaluate whether to account for these items as equipment. Specifically, a reviewer could consider and should consider whether the items purchased could be considered equipment per the institution's policies, are considered capital assets as defined in the uniform guidance, and or whether the items are necessary for the use of the equipment and therefore should be capitalized as part of the equipment's acquisition cost. As a promising practice, we noted that UConn's inventory control and capitalization general information policy and procedures states that when UConn enhances capital equipment to add functionality or to extend the useful life of the equipment, it must add the cost of the enhancement to the existing equipment. So the reason why this is important and related to indirect costs is if you are purchasing something under $5,000, but it should be included in your capitalization, and you don't do that, you're likely going to charge indirect costs to it, which we would be coming in and questioning. So this next example relates to combining personal and business travel. We've identified multiple instances during our audits where recipients did not maintain documentation to support that combining personal and business travel did not cause the travel costs to increase above the amount that the employee would have incurred had they only performed the business-related travel. To address this issue, award recipients could develop policies and procedures outlining the requirements for documenting that a trip that combined both personal and business travel did not cause the travel costs to increase above the amount that the employee would have incurred had they only performed the business-related travel. As a promising practice, the University of Central Florida's travel manual states that travel reimbursement vouchers must require the traveler to provide a description of the business purpose of each day of a trip, and that the vouchers should note personal for dates and times that the traveler was on taking personal time. This example relates to inadequately supported salary expenses. So we've identified instances throughout our audits where recipients charge NSF for salaries paid to hourly employees for services performed outside of their normal duties using pay rates and/or hours that are not supported by the salary agreements of that employee or employees or the timesheets. So to address this risk, award recipients could strengthen controls related to establishing and documenting compensation rates and timekeeping requirements for individuals who do provide service outside the scope of their regular duties to benefit sponsored projects. As an example of a promising practice, the University of New Mexico created an extra compensation request form that employees must use to request salary for work performed outside the normal departmental duties. Our next example relates to the inappropriate allocation of travel costs. We've observed recipients that charge NSF for costs incurred for employees to attend or present papers at conferences that ultimately benefit multiple of their awards, but they ultimately allocate 100% of the travel costs to a single award. We suggest the recipients could develop and implement policies and procedures that define how costs should be allocated and how that allocation methodology should be documented. Further, award recipients could provide additional training to staff on how to ensure they are allocating costs in accordance with this established policy. Now, I use travel as an example here, but we see allocation decisions all the time that potentially could benefit multiple awards. And it's really important for the auditors to be able to understand how you came to your allocation methodology. And there is a requirement within the uniform guidance that methodology be documented. So if there is any doubt with a particular cost of whether the allocation is correct or not, we always recommend that you err on the side of caution and document. As an example of a promising practice, we noted that Caltech's travel and expense guide provides instructions for allocating travel expenses by percentage or by amount across multiple funding sources. Cindy, was there a question we wanted to get in there?
Yeah, I think this area is important because it's one where I think traditionally many of us have interpreted that if the travel was beneficial to the project and was in the budget, while we are very practiced at allocating other kinds of costs, for some reason the travel to a conference in particular has not been something that we've looked at the same way. So this is one you may want to continue to emphasize in your training and call out. And then we did have a question from the audience that's related, I feel like, to allocating, because the question is on travel. The issue that my institution often sees is that the PI will travel for 3 months, then they have to be reimbursed for all that. Has there been a rule to consider to limit the timeline of the travel? And my guess is no, but on the other hand, you have to keep in mind what's your period of performance, and if someone's traveling for 3 months, it's unlikely to all be allocable to one award. So, what have you seen this? I mean, have you seen a best practice such as having reimbursements throughout that period as opposed to waiting to the end or something like that?
Yeah, so that is a unique circumstance, and actually that is one that we have observed. But before I answer that question completely, I just want to add the caveat that we in the Inspector General's office are not a policy setting body. So for these types of policy questions and whether something has been considered, that's really something that should probably be sent over to the NSF policy office as a question. But I can tell you what we have observed during our audits. So in instances where you see an extended travel situation, whether it's 3 months or 6 months or whatnot. We have seen some institutions that actually have specific long-term travel policies that adjust the amounts that can be collected, whether it's per diem amounts or what can be reimbursed. And it also provides additional guidance for how allocations should be made. So what I would suggest considering is that if this is something that does happen on a regular or frequent basis with your institution, and an additional policy related to long-term travel makes sense, that might be valuable. But as always, I certainly recommend reaching out to the NSF policy offices. They'll be able to provide the concrete guidance that's useful. One other thing I wanted to highlight. So Cindy, you brought up how allocation for these travel costs seems to pop up a lot. Maybe it would be helpful to help describe what we do as auditors when we're looking at these. So we will look at as much sources and documentation as we can. So we will request agendas from these conferences. We will go back and we'll look at the annual or final project reports to see what was referenced there. And we will conduct whatever interviews are necessary. So we're trying to build as complete of a picture as we can. And allocation can be a gray area. So we try to make sure that we understand it as best as possible. And certainly this is an area where reasonable, educated folks can disagree, but you're being able for an institution to describe how they developed their allocation methodology and that it's actually documented, that saves a lot of those questions and is a real kind of, it's not a complete get out of jail card free, but it helps avoid these gray areas where we could come to disagreements. So our next slide, and this is our final example relating to non-compliance with non-compliance with institutional policies and procedures. So in many, and I'll probably go out on a limb and say almost all of the audits that we conduct, we observe recipients where times where there is non-compliance with any number of their policies. These are the smaller type of findings where maybe an I wasn't dotted, a T wasn't crossed, but sometimes they get elevated into bigger issues by not following internal policies. So in this example, we observe recipients charge NSF for salary costs included on effort reports that employees did not certify in accordance with the award recipient's effort reporting policies, which is a requirement of the uniform guidance. What we're suggesting is that recipients could implement positive or negative incentives or any type of incentive really. And it could be something as if we're going down a stick rather than a carrot approach, something like restricting an ability to submit new proposals or the removal of all uncertified effort from sponsored projects for employees who do not certify their effort reports within the time period required by the recipient policies. As an example of a promising practice, the University of Wisconsin-Madison implemented a new policy which identifies the administrative ramifications for not certifying effort within the effort report certification time period. So with that, I'm going to turn it back over to Mark to walk through the whistleblower protection.
Yeah, before we move to that, just real quick, one other question about the travel. The question is, can you clarify how conferences that can benefit multiple projects, how you would make that allocation? I guess, you mentioned Caltech had promising practices. Would we be able to find detail there on how they're making that allocation determination?
So I don't want to speak for Caltech. I would say go ahead and open the report and click and read through the Caltech policy. But what we would look for, and something we do look for, is oftentimes we'll see attribution within the a slide deck or whatever is presented of the sponsored awards that relate to the presentation, or we will simply ask the question, how does this relate to the sponsored project that we saw it charged to? And we could end up having follow-on questions that get to what is the other sponsored projects that a PI might have, and understanding whether or not those were also benefited. And then we would ask the question of why was it only allocated to one award, or why was it allocated in a certain split? So this is one of those where I can't say we have a specific policy or a specific audit procedure. It's a series of procedures based off each circumstance.
Yeah, it reminds me of when I used to do cost accounting training, and saying, anytime you've allocated 100% to something, it's easy to poke a hole through that. So any kind of attempt to allocate is better than no attempt to allocate, because somebody could always argue that you're 50-50 or 25-25-25, whatever it is not precise or accurate, but you probably could argue back. But 100% is hard to argue if you can show that there was another benefit. So thank you.
And I think it's worth reiterating, the Uniform Guidance essentially states that you must have a reasonable documented methodology. So if you all have thought through that and you have a reasonable methodology and you document it, that really makes it hard for us to argue otherwise. So that's really the easiest and most effective way to ensure that we don't have to have these types of conversations.
Thank you.
All right, Ken, I'll pick up with whistleblower. I know we're running tight on time and want to leave time for questions. So whistleblowers are a foundational component to ensuring transparency and accountability in the government. Protecting NSF employees, contractors, and award recipients who step forward to identify potential wrongdoing is a core value at NSF OIG. And we take this area very seriously, and we take protecting whistleblowers very, very seriously. And whistleblower protection is essentially a protection from retaliation for making protected disclosures. I'm not going to read the slide to you. You can see up there, but you can see the list of what's considered protected disclosures and who is protected by the law. Additional information about whistleblower protection can be found on the website that's listed at the bottom of the slide here. So if you have any specific, next slide, sorry, Ken. If you have any specific whistleblower protections, we actually have somebody who is our ombudsman / coordinator for the program, William or Bill Kilgallen. Please feel free to reach out to him. We do take any information that comes very seriously, and we make every effort to protect the person that is providing that information. This is a really important. Anytime funds are wasted or misused or fraud occurs, it diverts resources from better and more meaningful scientific uses, and it hurts the overall reputation of the research enterprise. It's incumbent upon all of us to help maintain integrity in this enterprise. So what can you do? You can contact us about any issues identified in the first column. Your efforts can help ensure the confidence of Congress and the American taxpayers in the federal research funding system, and potentially save taxpayers' dollars. And just to reiterate, these protections are applicable to NSF employees, contractors, subcontractors, award recipients, and even sub-award recipients. Next slide. This is our contact information. This will be in the slide deck that will be posted. And if you need anything, please don't hesitate to contact us. Also, all of the reports, including promises and practices, can be found on our OIG website at nsf.gov/OIG. And with that, I will open it for questions. And I think there are a couple already in the Q&A. So with that, Ken, if you want to rejoin me for questions, that'd be great.
Yeah, I answered one then and then realized I might have been presumptuous. The question was the policy for Caltech. They would find that within the report, right? They would be able to find a link to that, and the same with Wisconsin or the others.
Yes, absolutely. So if you open the report, and we have the report actually linked within the slides. Let's see if it was back on slide number 5, or again, you could just Google NSF OIG promising practices, and that'll provide you the link. But yes,
Great.
if you go into Appendix 2, we have all the links called out in text boxes for each of these promising practices.
That's great. While we're waiting to see if some more questions come in, I'll just say I really appreciate what you mentioned about the strengthened relationship between NSF and the NSF OIG. I'm a former auditor. I understand the need for independence, but from what I've seen in in more recent times since Mark's been around, we have seen a more aligned approach, or when anything did get out of alignment. For example, some questions about applying the proposed F&A rate when it was lower than the negotiated rate in effect at the time of the award. All of those things, we seem to be coming to a resolution more quickly. And in the past, sometimes it felt like the institutions were kind of stuck in the middle between, what from our perspective seemed like two different units of NSF. So it didn't make any sense. So I really appreciate that. And I think I speak on behalf of the community in that regard.
We appreciate that, Cindy. And it is a fine line. We have to maintain our independence and keep the auditors open mind. But we've been working really hard. We have regular conversations with the Audit Policy Office, Resolution and Advanced Monitoring, and Teresa Lenkovich, the CFO, and I talk regularly. So we hope we're making advances and doing things better, and that's being useful to the community. So. And also, I just want one other thing just to reiterate: we are not a policy office. We don't speak for NSF. They make policy decisions. You can contact NSF directly, the Resolution and Advanced Monitoring Branch, which resolves OIG audits. That's a great place to start. And if you ask us a policy questions, we're likely to send you to NSF. But you can be assured that if you go to NSF, we're likely we will have the same answer they would give you.
Yeah, and I think one other thing, and I'll just give an example of how this process is really strengthened, and it's really a credit to NSF's willingness to work with us on this. The Resolution and Advanced Monitoring Branch, when they start to see common findings throughout our reports that they don't necessarily agree with, they're going to come to us immediately and not wait for them to finish the resolution, say, hey, OIG, I think there might be something here that's worth discussing. And we'll sit down, we'll have that discussion, and we'll work through it. So maybe something will appear in a few audit reports, but as soon as either us or them identify something that could be impacting the recipient community where this is disalignment between all of us, we try to get that clarified as quickly as we can, because we don't want to put undue burden or resource strain on anybody and having to argue and fight with any of us about an interpretation issue.
So your colleague Rochelle Ray has typed contact info for resolution and advanced monitoring. I think maybe she wants you to provide that.
Rochelle, I don't know.
She's provided her. Okay, okay, thank you.
Perfect. I assume everybody can see that. Otherwise, I'm happy to say what Rochelle's email address is.
All right, thanks. Another thing I was thinking about, when we were preparing for this session, I, kind of set the stage talking about, you've worked with FDP a lot, but reminding you that one of the primary tenets of FDP is reducing administrative burden. And I appreciate that the report is called Promising Practices as opposed to Best Practices. We might prefer reasonable practices, but that might sound a little weak. But if we like to have, best practices, but given all of the things that we're expected to do, sometimes reasonable practices is as good as we can get. And so I think that, sort of like I was saying before about arguing 100%, being able to say that our our reasonable practice is good enough. It's easier to do if we're not trying to model that against best practice. So I appreciate that. I mean, are there any plans about, any follow-up with this where you would identify others or maybe work with other OIGs to do something similar?
So we are going to continue to collect this type of information on our audits going forward. So it's entirely possible that once we collect more information across a broad population of audits, maybe 3 or 4 years from now, we might release an update report if there is any type of significant change or material information that is worth sharing that's not already captured. It's a good question of will we be working with any of our other peer OIGs? Mark and I will actually be presenting to a group of inspector generals that sit on the SIGI audit committee in a couple of weeks, highlighting this specific report, and hopefully we'll see if there's any opportunities for collaboration after that. I will say that just by the nature of NSF and how the majority of, or the bulk of its mission is pushing money out the door, specifically to the recipient community, it's a little bit different where it makes sense for us to have such a large focus on the community. Whereas I know HHS has NIH, and NIH also pushes out a large portion of funds out the door, but the Inspector General at HHS overlooks everything that HHS does. So there's not other Inspector Generals necessarily to have as narrow of a focus as we do towards the recipient community. But if there are opportunities for collaboration, we certainly will.
And another part of this is changing the way that OIGs work with agencies and how we communicate with each other. And that's part of our messaging, as well as, how do we reach this broad audience? How do we do this better? How do we make it less painful? And how do we get to resolution and change that is needed? And so that's a big part of the message that we're trying to send out to the community.
Yeah, and we appreciate that, of course, too. The collaboration that you're seeing with us. You could have held these promising practices and a spreadsheet in your secret files and said to your auditors, hey, look for this, and if this isn't what they're doing, question it. So sharing what you consider promising practice with us, promising practices with us is very much appreciated. What about the flip side? What about maybe not, you wouldn't want to call people out the way you have with promising practices, but practices that you've seen that don't work out so well, that have resulted in audit findings because their practice really didn't result in compliance.
So that's a little bit harder. As you mentioned, we don't necessarily want to call people out in a bad news report that aggregates so much and put people out there on a pedestal saying they're doing a bad job and throwing that out to the community. Not saying that they're doing a bad job. Their policy might not necessarily ensure compliance with a specific area. But I would say that really is covered through the audit reports themselves. And I know one of the things that NSF's resolution and advanced monitoring branch does is they post their management decision letters on their own website to close that loop with our audits, so that what we do include in the audits, ultimately the resolution is visible to the public as well, and that there's a broad understanding of how audit findings ultimately did get either agreed upon or disagreed upon with NSF. And one of the things we'll continue to do is we do use our outreach efforts coming to conferences like this, or whether it's a different organization, but we try to highlight the continued findings that either pop up to just regularly, or things that are unique and interesting that are emerging, or anything that might be helpful to help highlight those issues that we're seeing. And I know NSF also does a good deal of outreach themselves on similar issues.
And along that lines, we are getting ready to issue a similar report on EPSCOR. So anybody with an EPSCOR jurisdiction, it points a little bit to some of the problems we found and what the awardees need to be aware of. So it's a little bit more focused on, we found a lot of things that could use improvement. And so that's in draft. Hopefully we'll get that out in the next couple of months or so.
Great, thank you. Yeah, I've read a lot of your audit reports over the years, and I do think you do a good job of, you know, it's usually apparent from the way it's written whether the institution's policies and procedures weren't effective or they just were failing to implement and follow their policies and procedures. So that helps us as a community. For those of you who might not be, you know, watching the Q&A, I just want to say, you know, Rochelle has posted some additional information in addition to her contact information, and you know, also the management link to the management decisions that were referenced.
And I see there was a question about the EPSCOR report that's forthcoming.
I answered that. That's focused on the NSF program, not any other agencies part of that program. So,
and that's all built off a body of work that we've already conducted. We went out and did several audits within EPSCOR jurisdictions, and this is really just pulling together those observations of what we found through that audit process.
Okay, we have a couple of minutes left, but if there aren't any other questions, you know, I definitely want to thank you and thank those of you who posted questions and additional information. Okay, we got one more question. We've seen multi-million-dollar fraud for selling laptops on eBay. I'm sure that the school had practices and someone caught that. You know, can you share some of your sleuth techniques to help us understand how to find this, even when we think we have procedures in place to prevent it? So yeah, how do we catch these things before you do?
So that's a good question. I would say there's kind of two things. There's your overall broad control environment and your tone within that environment. So you want to have a environment where people feel comfortable that they can go to their leadership and make disclosures if they see something that seems inappropriate. So you want to be able to use the people that observe this, that aren't necessarily participating, and make sure that they feel comfortable saying something is wrong when they see something is wrong. So it's about leveraging the ability to make sure you have that environment. But otherwise, it's really a lot of your practices that look at deviations from what might be budgeted. If you're seeing supplies and equipments that were supposed to take up 10% of a budget and it's taking up 80% of a budget, that's something that we would probably look into further. And beyond that, it gets to your property management policies and checking in on an annual basis on if those types of equipment should have been tagged, verifying that they're still around, and that you have strong redundancies and separations of duties for that process to make sure that you don't set up a situation where one person could circumvent the controls and conducts something as that was just described. Mark, anything else there?
I think you hit it. You know, the way you find these things is being actively involved in the organization, watching your folks, being around, talking to people, and just looking for those odd things like, you know, how come this computer's not tagged? And a lot of, you know, I'm a fan of managing by wandering around, which has not been possible for the last 2 years. So I wander around Zoom most days. But yeah, I think that's a big part of the control environment. Do you really know what's happening? Are you checking to see if the policies are being followed? You know, and are you out there talking to folks? Because when you get out there and talk to folks, you see little things, and encourage your folks not to be afraid to say something. And that goes back to whistleblower. If you see something, and I hate to use an old cliche, but if you see something, say something. And if it's nothing, that's fine, you know, that's great. But if you see something that doesn't look right, say something. And Cindy, I just saw a question pop up in the Q&A about the observations on plagiarism. That is not an audit report. That was done by our Office of Investigations primarily. They did do a presentation to the Committee on Oversight for NSD about 2 weeks ago, Ken. I believe that was recorded and is online. So you could look at that presentation. I don't want to jump ahead of myself and give out the information as to who to contact, but we can certainly get back to you and give you a point of contact. We'll give it to Cindy, and you can let you send it out there for the group. It's a really good report, and it's very interesting findings. The board had a lot of interest in it.
That's great. Well, we are out of time now. Thank you again for your effort that went into this report, and for not only this session but the other outreach you've been doing to us to share these promising practices. And most of all, thank you for framing it in a way that it's clear that these are not new rules or even guidelines that that you will going forward be expecting us to adhere to. So thank you very much for helping us keep the administrative burden down, but the stewardship up.
Thank you, Cindy. And just real quick, a thank you to the FDP for having us. We appreciate the partnerships that we have with the recipient community, the ability to come out and answer questions face to face. So thank you all for having us.
Thank you. Everybody have a great afternoon.
Thanks, Cindy.
Enjoy the rest of the meeting.